Hello, everyone! Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! It is, well, before we get going, I just want to make sure YouTube's working. Hello, everyone! And it is, yay. I see there's a few people over on YouTube, so welcome. A few people in the lounge. Today is Tuesday, so happy Tuesday, everybody, November 5th. Had a really fun evening with a couple TRIers last night, and we're going to really try and get going a trading plan to do our TRI SOF principle on Deribit. So that's a big project. A few TRIers, some of the OGs here in Vancouver, and I are going to work on over the next few months. So we should look forward to that. Super excited, and fantastic meal we had. So I'm feeling back in the saddle. It is the middle of November now, so bye-bye October. Market's up and down like a horse drawers as usual, but some setups are coming in. And I'm having a lot of fun on the site, sort of walking through a potential bullish setup on Bitcoin. No idea if it's going to work. I mean, I really don't know. And it's a trader's life. Just, build your plan, follow your plan. I make my journal public, so if you do want to follow along, feel free to check it out. But I started this journal entry back when we first sort of postulated the idea of Bitcoin moving higher. And I wanted to sort of build a position to try and participate in this. Like anxiety-wise, it's awfully tough to go through all your money at a trade right away. So, I wanted to sort of nibble my way in, and I had sort of a fun story with different purchase levels, and you can just follow as the trade's working along. Zooming in and out. At present, yesterday it was awfully nice. We got a big pop, a breakout yesterday. It's interesting how we did run into sort of, existing cute little trend lines that were working, existingly. The market actually did bang into that level. On the breakout here, and I think this is a good lesson for everybody, is alerts go off, alarm. You don't really need to chase this. I just, worked the order at the level that I said I was going to buy. Basically, that's big W. And you can see the market worked its way down and gave me a fill here midday yesterday, mid-afternoon. So as a result, my new average cost, ironically enough, is actually right back to this original fill level. It's like within like 10 cents of that level. So did do a little bit of buying down below. Did originally buy this W to just sort of get the ball rolling. And then I went and added to the trade on the breakout yesterday. And interestingly enough, Bitcoin's just sort of floundering around here this morning. Frankly speaking, I don't know which way this thing wants to break. Had we accepted above, and why don't, before I get into the particulars, I just wanted to comment that the trade is in the library, or, in my trade journal. I'm actually meeting with Sjord over the next day or two to try and sort of figure out how he would like me to be posting these trades on the site. So this format may change. But, if you did want to follow along step by step, this is the resource for you here. So we'll get more into Bitcoin and crypto at the bottom half of the hour. And today being Tuesday, yesterday we had actually a double barrel treat. We had Sjord come in, and we had Jamie come in. So, please refer to that. Some great analysis by Jamie. Maybe we'll talk econs here in a few minutes. Some interesting data points that sort of validate. Also, too, we had Fed speakers come in overnight, trying to talk the market down a little bit. So lots and lots of stuff for us to review. Okay, so where do we want to begin? I usually like to begin the day with just a quick boo at what I would consider And of course, this is still open for debate, I suppose. What are sort of risk on, risk off proxies in the marketplace, in my eyes, doing? And it still feels as though risk on is catching a bid. And as you can see, like I like to put the words over where the market is when I first get up in the morning, and then when we do this daily brief, sort of review what has happened over the past hour or two. So we can see that yen has now broken through the bottom here. And remember, currencies lead everything. Bonds are pressing even lower, and bond chart looks like a nightmare. And you can see right out of the gate, the sellers are still very, very active in the gold market. So on balance, gotta say, folks, this is feeling very risk off is off right now. It's difficult to say that, right, and articulate the correct wording there. But I don't see anybody, if anything, watching the U.S. dollar index this morning. I get the impression that the U.S. dollar index itself is really actually trying to turn the corner here. Here is the U.S. dollar index itself that we like to follow, and lo and behold, does that look like any kind of letter of the alphabet we like to pay attention to? So, this is the daily chart, and on the free broadcast, we talk about that top and that weekly fractal. If we change this to a weekly chart, you'll see that. Right, there's that weekly fractal. We dumped, and then the past couple days, it's just been like, oh my goodness, what a battle. I think also, too, what I found really, really interesting overnight. Let's go back, sorry. If we go look at the euro, this is absolutely textbook. Literally, people take a screenshot of this. You fancy yourself a Forex trader? This was basically, this is everything that you should learn. So we had a big jump up off the lows, right? And that sort of knocked the US dollar down. We always want to ask ourselves, where is 38.2s off of that range? So a very natural sort of level for this market to pull back would be to that 38.2, which it basically did. And you might even argue A, B, C, D, its way down into here. Is the market a bull? Is the market a bear? We'll find out on the resolution of 38.2s, and sure enough, we rallied away from that level. And we rallied right into a big fat reload zone, smackaroony. The interesting thing here is, what's the economic situation in Europe right now? Remember, all these currencies, they pay you to basically hold their paper. And there's going to be obviously, more impetus to hold a particular currency's paper if what? There's got to be some sort of condition. I don't know. Is any of you guys listening? Do you want me to do the quiz thing kind of thing, or just no quiz? Just say your damn presentation, Brian. Don't make us participate. I don't know. Maybe we should get some feedback from you guys. But long and short of it here is you're only going to own euro paper if you feel as though you're going to get paid to own the euro paper, which means you're going to see at least positive interest rates. And really, it's a question of relativity. What's been sort of the trend in Eurozone economic activity of late? It has been good. I don't know whether you watched Jamie's presentation on the fundamental numbers, but they've been pretty ugly out of Europe lately. So that means that the impetus for the central bank to raise interest rates, which is what you get paid to hold their paper, isn't so good. And then what have been the econs coming out of the United States lately? Of course, the Fed went and cut interest rates. So the knee-jerk reaction is, oh my God, interest rates are going to zero in the States. Get me the hell out of the U.S. dollar, blah, blah, blah. But I don't know. Did anybody see the econs? We talked about this on Wednesday. But, not on Wednesday, on Jamie's broadcast, I guess, yesterday. But what report did we come out of yesterday that we were like, oh my God, we got to pay special attention to this? Because really, given the demographic situation, this is really the direction the economy's heading. Anyone? How about people over on YouTube? Does anybody remember this? There's about 15, 20 people over there. Somebody's posting price charts in the lounge while I'm blabbing. David, concentrate on this stuff here. I'm trying to help you learn, man. So, anyone? Does anybody have any ideas? Wow, this is a sleepy bunch. Nobody? Oh, well. We said pay special attention to the services sector of the economy. What services? What are the services doing? Because remember, manufacturing that's like almost like a 20th century conversation for America. Of course, Mr. Trump would like to take us back to those days, but I think they're long gone. So it's really a question, especially with the baby boomers all in retirement. They all need to be serviced. What's the service side of the economy looking like? All right, I don't know. Did I say that enough times? Somebody write that shit down. Healthcare could be a service, especially things like elderly care. Definitely should be a growth industry. I remember when I taught this course back years ago, I used to get level 1 students, think about what are the industries that are going to see growth over the next, 10, 15 years. And anything that's servicing all these baby boomers in retirement, I think is a growth industry. So, what happened today? Why were we so, obsessed about services? Well, it turns out, remember we were watching the 50 level on the ISM, manufacturing PM. I'm saying too many things here. ISM is the Institute for Supply Management. It's the old Purchasing Managers Report. It is the inflation gauge. It's the economic activity gauge for the industrial side of our economy. Let's call it that. But as our baby boomers have been aging and the economy is shifting towards more services, I think the market is really going to be watching this non-manufacturing number very closely. And the point being here that a reading below 50 implies contraction, a reading above 50 implies expansion. So technically the services industry is still hanging in here pretty good. All right, I hope everybody got that message. Business, non-manufacturing business activity like this actually ticked up. So the economy isn't that bad. I might actually argue the economy is doing okay here. And we got lots of word from Fed officials on the release of this kind of data. And of course, it's always a challenge because I read these reports, at like 6, 7 o'clock, and then we don't get to this until an hour or two later. So I got to go find the damn things again. You'd think that I'd open them up and save them, eh? But anyway, a U.S. Fed official was speaking. Here, this guy here. Barkin was speaking this morning, and he was saying things like, these 3 rate cuts extremely unprecedented. Economy is still very strong. We really don't want to lower interest rates anymore. So, I think the fear was that, okay, maybe the U.S. Economy rolls into recession, and the Fed's got to take interest rates down dramatically, so the mass exit out of the U.S. dollar. But, like I said, the data's coming in relatively okay. These are all numbers above 50. Even things like the final PMI numbers for both, services and manufacturing coming in above 50. So yes, manufacturing looks like shit, but interestingly enough, I think the manufacturing in North America will look like shit probably going forward. That's all been outsourced to whether it be Central America, i.e. Mexico, or China and Asia, and all that. I mean, basically, we're moving into a 21st century economy, and with the baby boomers, we have to be concentrated on what the services side of this economy is looking like. Okay, so that was a big long rant. As I'd sort of said in the lounge this morning, there's going to be a bunch of rants here this morning, so get ready. But I wanted to talk to you guys about that. I also noticed too that as this guy's sort of speaking away here, Barkin, I wanted to go over and look at the yield curve and just see whether, are they still in crisis mode? Are they still sort of like, oh my God, everything's collapsing and we got to do something here? Interestingly enough, I think you could make the argument that now short-term U.S. rates are actually below all of the other rates, and all of the other rates are now actually ticking up. Somebody's sending me messages. Joshua says, rants equal value. I appreciate your positive sentiment, sir. But I don't think we have to have the same sort of conversation that we were having there. Some guy's sending me a ton of messages while I'm right in the middle of the daily brief. So sorry about that, everyone. I don't think we have to worry about the same concerns that were dominating the market there at the end of the summer. With all these yield curve potential inversions and stuff, things have changed very, very rapidly. Risk on, risk off kind of idea. I've talked to you guys about this recently, and of course, everybody should see this M. If this M comes in here and actually fires off of these bonds, oh man. The irony of it all is you actually might find that if and when this M comes in here and we dump down to 50% rules, and all the yields start going up, you're going to have people in the stock market all of a sudden look over at the bond market and go, oh crap, the interest rates are going up on the long end now. Oh, we got to sell stocks. So in a weird sort of way, we actually might have sort of a self-fulfilling prophecy. What does the next sort of, stock market peak look like? If these things dump hard, then, at some point people are going to have to go, well, we have to redraw our fundamental valuations based on the higher cost of borrowing. Interesting, too, looking at this. And I think this is really what the market needs to see. The irony of it all is you guys haven't lived in like sort of hyperinflation, rising interest rates. I mean, it's this kind of shit that's going to absolutely kill the Canadian real estate market. And I thought it was interesting. You're already starting to see that, any Canadians. Shane was telling me that he's in the construction industry, and he was telling me that one of the firms that employs a whole bunch of specialists, which he happens to be in one particular field, they just laid off 20% of their workforce. Boom. See you later. But it's this kind of stuff that's going to absolutely kill the Canadian real estate market, because heaven forbid, we actually might have some inflation coming back into the picture. And with the Fed taking interest rates down, that's only going to fuel that inflation worry. And this is my worry, is that the Fed overdoes it on the downside and we actually head into like a hyperbolic inflation spike here, especially if these bonds roll over hard here. So get ready, folks. And of course, we all know Jupiter Saturn cross next summer. That's a long term cyclical pivot. So, interesting to see how interest rates might be going through that long term cyclical pivot. We've got Saturn Pluto cross coming up here in January, which is sort of the pivot of financial assets. Maybe that's another harbinger of the end of this 35-year falling interest rate market, and actually we start going back living in a rising interest rate market, which might be the actual undoings of this economic cycle. But I guess the point I'm trying to get across here is you can almost feel that the seeds of change are shifting here, and bringing it back full circle. These Fed officials, I get the impression they really, really do not want to lower interest rates any further. So this is going to be really, we want to keep a close eye on obviously, what happens with this whole trade stuff. The sort of tone that I'm hearing is that the trade talks, if you will, are positive. So that's sort of working away. And interestingly enough, if we actually can get through, like I said, October is a dangerous time for the market. Once we got through that sort of October cycle, we're going to start getting into sort of election year market states. And very rarely does the market ever, quote unquote, crash in an election year. The only way that they would, the only time I've seen it in my 30 years in a U.S. election year, that is in 2007 and that election in 2008. That was the end of George Bush Jr.'s tenure, and it was just common knowledge. Nobody was interested in having Dick Cheney become president. So sort of that vice president inertial sort of push, it just evaporated. And it was almost like in 2008, every Republican just got the hell out of Washington. And they just pulled the plug on the market. I don't see that kind of scenario happening here. If anything, I think Mr. Trump has a very strong vested interest to get reelected and sort of keep things going. Kind of Sjord's report on the Fed's balance sheet. I get the impression that the Fed and the big bankers got the message maybe 6-8 months ago that, hey, get the hell out of the way of the market. And start sort of supporting the economy with lower rates, which I think will, especially, it takes a good 6 months or so for lower interest rates to actually kick in. So, I'm seeing more and more and more anecdotal evidence that the economy is actually going to ramp up into this next year rather than roll over hard. But we'll see what happens. Only time will tell. As we had, I think I had shown you QQQ. I think you can, technically make the argument that probably not a good idea to short this just blindly. When we look at something like NASDAQ tech stocks, I think we can still press a little bit higher here. I do remember last week we were sort of talking about how we're going to act at 127s, and we just keep forging our way higher. We're getting through sort of the latter part of the earnings season. So reports are still trickling in, and the tone in the market that I'm seeing is, pharma names are still catching bids. I thought Jamie's report yesterday was really, really great on that pharma outperformance of earnings. And it sort of makes sense why some of our pharma stocks have just gone ballistic here. And congratulations to people that were in the CLDX trade. woke up this morning to reports that people were banging out doubles on options trades. So congratulations. I think the Duke got a double off. Is that correct, Kevin? Did you say you got a double off on this thing?
I don't know. Yes, sir. Yeah. So the 70 cents, I bought it at 35 cents.
Excellent. So congratulations. Zach and I are in the $4 calls, so we still got a little ways to go here. But just look at that chart. Picture says 1,000 words.
So mine were $3 calls.
Yeah, I know. So it's kind of cool. Kavarkanator here is already banging out doubles. He's such a fucking monster trader. It's ridiculous. Jerk. But congratulations nonetheless. And the point of the matter here is this is everything that we teach on TRI. This is everything that we teach in our programs. I think our OGs become excellent demonstrators of best practices. So it doesn't surprise me that Kevin is banging out doubles here. Way to go, dude. Very, very impressive. And, I'm seeing a lot of that sort of across the board. Like I said, this crazy KPTI. Jesus, where the fuck is the top on this thing? For whatever it's worth, I'm in my free position now here, so I don't really care what happens. It's on the books. We'll just see what happens. I was actually pretty pleased to see that I went and threw in a stink bid on this Lovesac on the 78.6, and actually I got a confirmation of a fractal bottom here. So I'm feeling a little bit more confident about the trade. So, I got something to feel good about here this morning. But, that's the kind of market it is. And, look at this crazy market. Look at that thing. Again, this is just basically what we do at TRI. Hopefully everybody sees a W there. On this initial burst higher, we were able to get off, sell halves on doubles and stuff like that. But this is probably a really good analogy. Once you're in that free position, if you can somehow, just forget about it. Just put it away. This thing easily could go up and fill in this gap up top here, which these are $3 calls. So in essence, this call option could easily be worth a couple bucks down the road. And, we buy these things at 25 cents. So. But, it's nice to see. There are areas of the market that are moving up and that I'm feeling optimistic about. Actually, I went and picked up a little bit of this guy yesterday. Just bought the weekly W. I'm pleased to see we got some nice follow-through here this morning. And, of course, I've got bids working down below to add should that come in. So, just slow and steady. Just working my craft. Where were we? Okay. So, I was actually, risk off. It's still very difficult for me to get optimistic here. And it actually looks like an M just confirmed here on the gold price. This is off of the candle wicks and tails. It is finally filling in that gap down there. But I think as I was posting in the lounge, I like to use American Barrick as sort of a nice proxy, biggest gold stock around, blah, 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 blah. It did just trade to a new low here this morning, so, M's and W's, not really getting any W-type action here. And, of course, trade location-wise, I think probably people would be best to simply wait for reload zones. There's no hurry here. The gold stock index itself, this is still extremely dangerous. I think you could very easily come back and actually, there was an example. Oh yeah, I guess it was the gold chart itself. Yeah, so the gold chart, you can see sometimes you'll get markets that try to break out on the other side and then they come back and they can ride the trend line from both. Sometimes you get it just to walk it down the trend line. We've seen that on Bitcoin before. In this case, we've gone actually back through the trend line, so certainly no signs of quote-unquote bottoms there just yet. And like I just said on that gold index, wherever the hell it was, where is it? Over here. I wouldn't be surprised if we actually have to come and play against this trend line. And maybe that might even say, we could actually project these a little bit forward, and it gives you sort of a due date. something like that. So, if this wedge plays out to fruition, we might actually see our bottom there first. And actually, that makes sense too, because remember I said that usually the stock market likes to rally into the first week of December. So let's keep that apex in mind. You can see how that's like December 10th. And then remember our cycle idea. I actually like the idea of the stock market actually working its way higher into that sort of early December window there. Irrational exuberance, all that kind of talk. So, I mean, you never know. I mean, maybe we have to pull back, fill in some gaps, and then work our way up into that peak. But believe it or not, call Brian crazy, but I'm actually thinking that this is a stock market peak that we should be expecting, not a trough. So we'll see what happens. I could easily see us trade right back down to this sort of channel midpoint here. No problem whatsoever. And it might be a case that on that kind of dump, especially if it's like 300-400 point down day, maybe somebody says something stupid about China or something like that, and all hell breaks loose. Pullbacks down into this key support level here to me seem completely normal. And I might even on that event just liquidate that insurance policy, just take whatever premium I can and just hop off on the sidelines. I'm still mulling that over. The good part about it is we have enough up ideas. Actually, this guy's pulled back here a bit now, but things like Express and stuff like that, and KPTI. I mean, I'm enjoying the long side of the market, but those puts obviously have fallen in value. All right, so that's sort of stock market-y kind of talk for you today. Is there anything else I wanted to point out? I will say, and I kind of missed the trade, but nonetheless, I was very pleased to see for people like Kevin who said that he did get in on these long setups on oil. It's pushing to new highs. I'm feeling like, AB equals CDs are dominating here, which would take us up. And sort of you can see even right now they're filling in this gap as we speak. Still one more gap up top here, and technically that's still a little open air right up in that little area right up there around 59.40. And interesting how that AB equals CD will take us up exactly to that level. And it'll also, you saw how the market, respected that trend line off the tops. And so my hunch is that the market's going to respect this trend line off of the bottoms, which again, Colleen used to like to watch value levels really closely. I think you could make an argument guys like Hogue might get interested right up here. And reload zones, trend line as resistance, end of AB equals CDs, gaps that need filling. I think we can make a pretty good argument for like $59 there on the crude. That wouldn't shock me whatsoever. And then also too, our sort of gold crude chart, if crude's pushing higher, does that help gold? Not usually. All right, so Kavarkinator's killing it. He's doubling his money on options in pharma stocks, and he's owning the long side of this crude oil market. I swear, this guy's... I got to take a lesson or two from this guy. Continuing that sort of theme about the U.S. dollar, a good chunk of this dollar index. In fact, actually, you can even argue on the daily charts. Boom, boom, boom. Nice fractal there. A huge chunk of this is euro and also British pound. Let's see. Can anybody answer this question? What are we supposed to think, considering that all that Brexit nonsense was all taken off the table now? But what are we supposed to think if we ever see the market smiling at us? So, those people that fancy themselves Forex traders, Sonny, I see you active in the lounge. Really should be taking notes here, dude. Um, can you see the potential trade setting itself up here? Anyone? Anyone? Bueller? Gotta say, gotta hand it to Goldman Sachs. I think they had to take some heat on their long call, but turns out that was right. If we just draw simple trend lines, I think you can make an argument exploration down into this area seems completely realistic. And let's see where a 50% roll lines up. Boom. Hello. So 50% roll. That's probably almost perfect, like Gann alignment. So then you have to ask yourself, all right, well, if I'm a Forex trader, can we see this? Remember I showed you that just beautiful textbook setup on the euro. Well, look what the British pound did here. All right, look at that. It's ridiculous. So I think that anybody who fancies themselves a Forex trader, not only did you get a pretty good short setup there in the euro, but I think you got an absolutely textbook setup there on the British pound. I don't know. I mean, damn. I see somebody else just posted in the lounge. Damn. So, I mean, hopefully you guys can see this trade setting itself up. And in a weird sort of way, guys, I mean, I'm not going to sugarcoat this. Nobody's going to say this life of a trader is easy. It isn't. This is difficult work. But in a weird sort of way, you kind of, if you do fancy yourself a Forex trader, you have to kind of anticipate this. You have to see this monstrous move up here and go, well, what's a 50% retracement? Because that's your bread and butter. And then, is there any way I can get short up top here? And if it does go back to the 50% rule, I get paid. I think you can make the argument this was actually an incredibly polite little inside bar failure there. Can you see that, guys? And that is like textbook. I mean, that's almost ridiculous how well telegraphed that is, eh? I mean, and actually, we were even sort of talking about this with Kevin earlier. Maybe you're a person that's kind of like, I understand your whole sort of reload zone concept, Brian, but I need just a little bit more validation. If I'm going to take a trade, I really need to see, some sort of structure that's going to help me at least frame the risk. So in this particular case, not only do you get reload zones, and you sort of let the institutions put the top in, and then you just simply, all right, that inertia's failed, let's get short. In this particular case, the inside bar is slightly outside of the reload zone. But if you had told me that you had been hunting this, and you strapped on your short from there, and you're going to risk against these highs, and you're going to look to take profits at the 50% rule. That's a 4.45 risk reward. Damn. I mean, that's sort of like the Druckenmiller. You guys ever heard me talk about Stanley Druckenmiller? It's actually interesting. Years ago, he used to be a totally unknown name, and when you'd say that, people would chuckle. Druckenmiller, what a funny name. But now, actually, when I say the name, people are like, oh, yeah, I know him, oh, yeah. He famously shorted the gold market on the election eve when gold spiked up when Trump won. And he shorted the shit out of it. So anyway, the point of the matter here is I think, I'll tell you, I mean, everybody should just take a screenshot of this and say, maybe take some time and see if you can build this chart on your own. If you can see these same levels. That's pretty damn compelling. I don't know whether it makes sense to take the trade off of the entire M. I think that might just be a little bit too much risk. But, like what you could do if you wanted to. Let's see. 1.39. Yeah, it's doable, but it's not great. You could let the M come in, and then on whatever sort of validation of the M, you're just going to simply drag your trade location tool. And the interesting thing is, I wouldn't be surprised if this actually becomes a future trade level, those candle body highs. So you could actually see like the British pound dump, like, let's go say to there, into that tail, right? So she just dumps into this, and then you're just going to simply, again, you have to anticipate this ahead of time. She's going to dump, and then we're going to let her rally back up, and then, of course, if we can get a nice little M, then we hit that thing. Or maybe it turns into an inside bar or fractal, whatever. And maybe maybe it doesn't set up as pretty as this, but the point here is we probably want to temper our enthusiasm until we get actually a trade that produces at least that sort of 2-to-1. Maybe the M comes in off of this level, 2.24. Okay, well, we can work with that kind of number. Maybe the entire move looks something like that. Who knows? Anyway, the point of the matter here is, learn from this stuff, guys. Like, this is just killer. And then what do you think if we drilled down to, like, lower time frames? We'd see signs of divergence and M's and stuff. My hunch is probably pretty good. And that's basically what this looks like, right? That's, if we pulled apart that British pound chart down to lower time frames, probably looks exactly like this. What is this? 6B. Yep. So you can see, we just throw this stuff on and go zoobity boop. There is your reload zone, and what a coincidence. Look at that beautiful top. Please, people, learn this. It's the whole reason why you're here. Look at that. Absolutely textbook. What do you think, guys? Any value in that? Please try and learn this. It does work. It doesn't work 100% of the time. Never going to give you that guarantee, but it works enough that if you just force yourself to hunt 2-to-1s, you'll definitely be profitable. Okay, let's head on over to crypto now. A couple interesting points I saw made on the site overnight. And it's interesting at our dinner last night, talking a little bit about sort of future expectations for the corn. I'm getting the impression that people are feeling as though cost of production will be $5,000-$6,000 post-halvening. But the problem we have to worry about is, when is this halvening actually going to develop? From what I understand, it was further out into the year, like summer, and then hash rate and all that kind of stuff has accelerated, block sizes, all that kind of talk. I'm not really the expert at that kind of stuff. But if I understand correctly, the halving has been pushed up to May. So remember, guys, usually these cryptocurrencies, remember we had that Litecoin example. Absolutely textbook again. If you're a crypto enthusiast, you really have to learn this stuff. But perfect analogy of this sort of halvening kind of event. Here was the halvening, and I don't know if this is exactly the right date. And the market topped out about a month ahead of that event. So, if Bitcoin is now halvening in May, then that means we probably should be thinking about April as sort of our rally peak. So that's sort of out in this area. Over the short term, I think you all know, and I sort of started off the video today sort of talking about this. I'm going to take a long shot against this inside bars lows, and if they fail, then I'm gone. But in essence, that is... oops, where did I put it? That's this trade. So I'm building my position, building that army. There is the level I'm going to risk against. And as sort of more bullish reasons come in, I'll add to the position. I told you guys that I was going to buy this W, and it came in and I bought it. I also told you guys I was going to be working reload zone bids against these lows, and I got filled on one of the two orders. I was sort of sniping along with my little airborne units when I saw opportunity when we were bullish. That was sort of through this period. Didn't really actually hunt any lower time frame setups yesterday, but I did see that the algo, or not the algo, this I want to be a day trader kind of model. And now, I think the gentleman who wrote this code told me that there might be like little errors and stuff. So notice there's something's not right about the code here. Notice that the 1 hour rolled up here, right on, we'll say on this event here. All right. Looks like right there, eh? So if we sync that to all charts, so you can see 4 hours actually. Now this is interesting. So the 4 hour actually was up, but I noticed that actually this now is saying it turned up here. So 1 hour turned up here. 4 hour turns up here. So let's change that to green. So I'm not quite sure why this script didn't turn up to here, because I remember yesterday this was green. So if you're going to use these scripts, please understand that they're just site tools built by the site members and stuff. Nothing is, production quality here when we do these scripts and stuff. We're certainly not selling them to generate a profit off of subscriptions or anything like that. We just hand it out for free. I like this whole idea 1 + 1 = 3, but please understand, use these tools at your discretion. I'm not quite sure, like I said, why this particular version of this script, this was green yesterday. Like you can see, I put the trade metric on here. I would only do that if this was green. I think what's happened here, though, is you have to understand that exponential moving averages actually do change over time. And this is one of the big dangers of back testing any models that use exponential moving averages at all. Because your signals, your crosses and stuff like that will actually change on your chart. So a script like that loads up in the morning, if this shifts over because exponential moving averages weight recent price action more heavily than past price action, if we get a big injection of volatility over the short term, that can alter the print on the screen of these moving averages. So I think that's what's going on here. So the point that I would just simply make is, when we were hunting this long yesterday, this was green. So it's an interesting sort of little anecdote of, vetting setups, getting to know your indicators. How do they behave? Anyway, so the point of the matter here is we were thinking uppy and bullish. And I got to say, that's a hell of a reporting period for this little setup model. It is interesting on the end of this event signal, actually the 1 hour's rolled over back bearish, and so that's why this went back to sort of non-green color. And then notice here this morning we're flipping back to, we had a pretty wild candle there about an hour or two ago, which was kind of surprised me, but nonetheless you can clearly see there's quite a bit of resistance at this level. And remember, that's that higher time frame breakout level. So it would make sense, there is that W, there's that M that I was worried about that stopped. Notice we broke out through the top, then M'd out, and notice that's right against that level. So there's a hell of a battle going on in Bitcoin right now, right off of this level. This is a massively significant level. Interesting when we look at our RSI study. We had very, powerful sort of trending, I'm a bull kind of signals. Things were marching up. We had a little bit of a disconnect here on the RSI study through this event. And I do know some people were hunting lower time frame shorts. I was posting in the lounge yesterday stuff like El Tango Naders, and they politely got bitch slapped out of the market. And if anything, this is kind of a good anecdote of why I kind of like to build these kind of models where, is it really a good idea to be going and hunting shorts while dailies, 4 hours, and 1 hour trend is all pointing up? That's pretty dangerous. So I kind of like having this in the back of my mind. Okay, well, in the short term, what should I be thinking? And through this, it was like, oh, I'm not touching the short side of this market. And sure enough, there was a big old kapow right through that. We M'd out. You can see the very well-defined M failure. M out on RSI. Could you argue that this is the second M here? It's aggressive. This little dippy dip here. I think I would much prefer like a nice well-defined M to really start calling that second M kind of talk. And then, we just sort of came face-ripping, screaming down here. And ironically enough, it's ugly, but I suppose there was a nice little fractal empire top you could have shorted there on a move back to the 50% level. That's almost like that British pound euro kind of talk. And then, through the morning, and what's really interesting about this is, gee whiz, right into the New York kill zone. Look at that polite little reload zone backup. So it was almost like, things got a little too ahead of themselves. We're not allowed to buy up markets, right? You got to work your reload zone bids, all that kind of crazy talk. And they just backed the market right up into this support and said, no, I'm still a bull. And interesting enough, through this event, and actually maybe... Oh, that was the London kill zone. Do we say anything about the odds of a pivot through the Tuesday, Wednesday London kill zone? Is there anything? Is there any kind of rule that we have about how often do markets like to pivot through the Tuesday, Wednesday London kill zones? Thank you, Andrew. So, ironically enough, that's actually incredibly textbook. And interestingly enough, this should be actually an interesting tell. So dump it into the original structure level through that London kill zone. Get everybody in the public freaking out and panicking and selling and the sky's falling. Londoners open up. They basically get handed the market on a silver platter. Works its way up, and then look at what time this pullback is. That's the New York kill zone. So in essence, London kill zone they put in the bottom. Issue the buy signal. New York kill zone, they bring it right down into that level so that all the New York boys go, hey, don't leave me behind. And then they go and break it out back to the upside. Isn't that cool? Tell you, man, you guys are actually getting a lot of really good sort of little, if you aren't a school member, if you're part of the school, you hopefully all this stuff goes, oh yeah, I remember that. Yeah, I remember that. This is an excellent conversation about, like day traders and, even swing traders for that matter, hunting reload zones, using liquidity event windows. But also, too, this is a really important, yeah, I bet it was, eh? So somebody says, wonder what happens if you draw reload zones off of this overnight rally high back against the low, and was that? And guess who's sitting there bidding through the New York opening range? I mean, this is basically the guy I used to trade against in the pits when I was at the prop firm. Boom. Just sitting right there waiting. And also, too, great conversation about candle body lows for trade location. Oh, my goodness. So, where does that leave us now? What I do like is that, like I said, I really don't like it when you get an M and then another big M, because in essence this stopped the bull run, and then the second M, boom, starts a new bear. So the fact that we came screaming straight down and then actually ended up Wing, and that's through those liquidity event windows, and that W is now confirmed, I think that actually stopped the bear. The bear never really got going in earnest. This almost feels like, okay, things got really crazy out of hand here, so let's put that on pause. Now we're sort of, okay, this downslide maybe got a little out of hand, let's put that on pause. And so now we're simply waiting for, okay, who's going to take over this market? And really simply put, I might make the argument that, if we actually go and carve out one big honkin' M here, then you'll know that we're in trouble. But that hasn't happened yet. And as I said, since we do have this new W working, ironically enough, what the best scenario would be, sort of just calm down and actually go and put in a second W, which of course is starts the bull, like this. That would be sort of best scenario for the bulls. So kind of just, again, and it's weird, I sort of said trendish to range-ish, back to trendish. I think actually we got to go, I said it, but back to range-ish. And that's sort of the state of crypto right now. It's almost like they're waiting for permission. And I like the idea that we actually do have some structure to work with here now. So that's encouraging. And I've got half of the position on that I want to have on. I don't know what's going to happen here, folks. Nobody does. This is a trader's life. But, I've got a relatively well-defined risk window. I now can start, doing things like front-running the bot and all that kind of idea. So I've got half of the desired position on. You can see I'm just slightly in the money right now, but there's nothing really for me to do here right now. I'll keep an eye on it. As you can see, I've redrawn new reload zones. So I have the next sort of reserves guys sitting down here. In fact, actually, I haven't changed my bid just in case there's some big FU move. So I do have some reserves still sitting, waiting I can throw at this. And, if we start actually accepting through, you see, we actually ran up and tagged the entry, but I'd like to see some acceptance and then structure, actually very similar to what happened here, off of the bot level for me to add another chunk. But right now I'm about 50% into this trade. Okay, I have seen some interesting sort of side conversations going on in crypto. I put out a couple really cool, one tweet in particular that really caught my eye. And, I need for all of you guys to start seeing the big picture here. So, a lot of people would look at this asset and they, is the glass half empty? Is the glass half full? Most people would look at this asset and say it's half empty, right? There's nothing really going on here. A whole bunch of people got scammed, and now the asset is dead, and all these people that bought the hype, they're all trapped and they're destroyed. I actually might look at this as the glass is half full, in that actually, when you come to actually participate and invest in ideas like this, the fluff is gone. There's no fluff in this market anymore. And then, and I thought this was really, really cool. Trade location. Yeah, we're definitely at the bottom end of the range. So that's, that goes without saying. Brian's a cheap ass, remember? So, Brian's going to be interested down here. I love the bottom end of trading ranges. So, you could ask yourself, do we have location? Maybe you took long shots off of here trading and you got busted out. I mean, it happens. If you were nanny nibbling, little old lady, keep in mind this is that 2017 peak. So ironically enough, if you'd just taken the past couple of years and just slowly nibbled away here, I think you're set, like awesome. And something here jumped out at me, which really I think is a huge tell. And that is, this is the concept, and I think the level oneers are doing volume analysis now. So you guys, I don't know do we have any level oneers in the actual hangout here this morning? No, maybe, no. All right. Actually, geez, some of our recent stalwarts are falling away now too. But I don't know if there's anybody over on YouTube there that's a current level oneer, but I think they're doing volume this week. Can I get some sort of validation? We got about 30 some odd people here watching this. Anybody? Is there any? Oh, Murat. Okay, good. Murat's a level 1 TEA, so good that Murat's here. But I think this is an incredibly powerful message. And yet, of course, nobody in the market's even the slightest bit interested right now. But this is, in my opinion, one of the most powerful things that you ever see in the market. And this is called a volume it's actually a volume impetus signal, but this is an OBV volume divergence. Very, very powerful. Clearly, money is going into this thing, not coming out, even though price is working its way to lower lows. And also notice, too, on this dump here, as we were making lower lows, look how there was just not that much interest whatsoever. This is a tell here that this thing is just simply exhausted. It's not really like there's new sellers coming in. It's just nobody is interested on the long side. Nobody's interested in buying. So the thing's just drifting. And then all of a sudden, just some big ass buy volume comes in here. And interestingly enough, this actually creates a volume impetus buy signal here. And we have a volume impetus sell signal here. And when you look at your OBV indicator, all you see is W's. And now, especially of late, all this, look at the volume coming in here. That's pushing the OBV to make a big honkin' W. I'll tell you, I think we're getting pretty damn close to the bottom on altcoins. It's getting closer. Yeah, so, at this point here, ironically enough, on a relative basis, gee whiz, it's not like you're chasing the top, And it's interesting, Dan there over on YouTube is reporting that, and I did see, I think, a couple other people in the lounge reported this, that they're reducing their supply dramatically. That's exactly what we want to see, right? That's exactly supply and demand. What usually happens? What's one of the major criteria that we look for in altcoin in venture capital stock investing? We want to see stocks that have been rolled back. The supply of whatever the issue is has been dramatically reduced. So, if anything, Dan, sounds to me like we got fundamentals meeting technicals. Son of a bitch, do we maybe actually even have a rational idea here? Wow. So, this is a good conversation about location. Looks pretty good. You're not chasing. You're not coming in in a frothy market. You look at your indicators, and they're extremely bullish. Now, what we really want to see, I mean, I don't really mind when I look at this price chart. What I see here is I see a trading range. Bottom end of the range, wicks and tails like to be eaten. So, explorations against the bottom end of that range to me look like buying opportunities. And then, of course, wicks and tails like to be eaten. Big old wick. What a surprise. We're basically going through that right now. You also notice, too, we're coming up against trend line resistance here. Actually, maybe that's way up there. I could easily see a nice little pop against these highs. That wouldn't surprise me at all. But, I would even suggest, people who are interested, do your research, look into this name. My hunch is if we break out through the top here, we're probably going to do some sort of exploration there. And then, if she starts looking like that, then we can draw our reload zones. It's going to sound awfully cliche. But we can start hunting trade locations. And I guess the way I would look at something like this is, if we can get a nice little pullback and a nice W, and we got something to work with. Ideally, we'd love, maybe this is going to take a bit more time to develop, but we'd love for these W's to come in on the other sides of trend lines and stuff. So, but, the message that I wanted to just get out to everybody is smart money is accumulating this stuff. And our indicators are starting to tell us, hey, start paying attention. Look how washed out Willie is here. Nice W's. I think you could make the argument this is a Davo, right? W's in OBV, W's in RSI, W's in Willie, all coming in, and in essence, that's off of that level there. So if we get any kind of WE action in this thing, very, very interested in Lumens here. Also did see someone mentioning Litecoin as a trade setup. I don't know whether I'm ready to call the bottom on Litecoin just because, it's, these crazy alts. If I look at the weekly chart, I think you can make the argument, we're looking awfully washed out. The bears really aren't that interested anymore. This latest FU move down through here actually produces divergences, just like we saw on that stellar lumen. Willie's pretty washed out here. I don't know whether we have to do things like AB equals CDs down to this bigger target. Maybe that comes in following whatever kind of dead cat bounce rally. We could probably work our way up against this high here. Because this isn't a good-looking W, it's very, very sloppy, new low. I can't really, say, well, we got weekly Ws, all that kind of stuff. So I still think this needs more time off sort of like the weekly charts to turn. But, it's interesting how this short-term moving average sitting there at, what is that? 66.33? Does that sound about right? Yeah. So let's head on down. What I think's going on here is there's a lower time frame play going on, kind of like the inertia that you're seeing on things like Bitcoin and stuff. I think you can make the argument off of something like a 4-hour chart. There's a pretty half decent looking bot setup that actually came in here. I do like the WWW, and that's very similar to what we've seen out of Bitcoin. I do like the push higher. Remember we said 66 is that 13 EMA on the weekly chart. So I got a sneaky suspicion that we're going to run into some sort of brick wall of resistance right up in here. And the fact that we've hit 63.86 here now, this bar's high 64.20, means at the very worst, right, if we come back down to this 59 area, just walk away at scratch. Just simple as that. But, some people were posting, hey, what do you think? I think Oscar, and it doesn't surprise me. Oh, no, it was Daniel. I'm sorry. Daniel was in the lounge posting long setups on Litecoin, and keep in mind that, if you want to, how do I bookmark this guy and just listen to what he has to say? I do that with Daniel. This guy's a genius, man. So, it doesn't surprise me hearing that he's hunting bullish setups here. The only problem is, can I come and actually participate at this level? No, you missed the trade. I think the trade was back here. And like I said, if we crap out now and we tag that 59 level, then I actually think you probably got to walk away. So I just wanted to comment a little bit about what I saw out of Litecoin. Now, the final thing I'm going to say here today, and I've gone quite a bit over time, so I'm sorry, everyone. But the final thing I wanted to talk to you guys about, had a really interesting post from a site member yesterday who's just simply asked me to comment, and he sort of said things like, it's very difficult to diversify in crypto and build out like an efficient frontier. And I said, absolutely, you are absolutely right. Most of these cryptocurrencies are basically the same thing. And, these big indexes, whether it be on Trex or Binance or even, the FA coins, to a certain degree, they're all moving basically the same. So I don't think we're actually ready yet to actually start building like correlation studies within crypto yet. I don't think there is, it's not like the stock market where you can buy a bond, then you could buy a stock, and technically they move in opposites, so your beautiful negative correlation, so your risk is mitigated. I don't see that in crypto. I'll just completely say a spade a spade. I know at the top of the market, a lot of people sort of did get lulled into that sort of idea that these things actually have intrinsic value. I would simply say you want to try and start from a position of strength with crypto is start what is the actual intrinsic value of these coins. And if you can't figure that out, then my hunch is it's going to trade purely on sentiment. And if the sentiment in the space is bullish, then it'll face rip, right? Banging out doubles, blah, blah, blah. If the sentiment is bearish, then it's probably going in the tank. And I see, like 80-90% of this space exactly like that, if not more. At the same time, too, though, let's keep in the back of our minds that, if you had built out, like, let's say, Little Old Lady, Nanny Nibbles, that kind of stuff, then, ironically enough, what will end up happening is your portfolio will look almost exactly like this. I mean, they say that if you buy more than, I think it's like a dozen issues in any particular account, it's very, very difficult to actually outperform the index on a day-to-day basis. The difference here, though, is don't look at it like we're going to build a portfolio and you're going to sell the portfolio, the entire thing, on one particular day, and you're going to mark your performance relative to the index. Don't do that. Because I can guarantee you're not going to outperform the index. It's almost impossible. What ends up happening is after you get about 10 inputs into your portfolio, you just basically match the index. So, as these indexes look, if you had built a diversified portfolio and you were just simply marking your portfolio to market and never selling halves on doubles and that kind of stuff, then your portfolio should look exactly like these. And probably, if you invested only in Trex coins that were only listed on Trex, your portfolio might look like this, which, of course, I don't think is a good idea. We've talked lots and lots and lots about give yourself outs. Don't if a coin is only listed on Trex, be damn careful. If you've taken the past couple of years and you've gone slowly, and you've just nibbled your way on 20 different names in crypto, then I think, like I said, you're going to well position yourself. You're well diversified. And what we really want to do as market participants here is think of us as farmers. And every single little 5% chunk of your portfolio is a crop. You're going to plant it. Now, you're not just going to plant it and then walk away, and it's going to grow, and then it'll recede, and then next, as the seasons come along, it builds deeper roots, and the plants get bigger over time, or maybe they shrivel up and die. That's not what we do here. We're going to plant the crop, and then when the crop actually comes to harvest and it's fully grown, i.e. sell half on a double, you're going to clip it, right? And you're going to harvest the crop. And then, ideally, if that money does, whether it's Bitcoin or whether it's cash, you harvest, sell half on a double, well, then you go and take that realized gain and build your portfolio and just keep doing that over and over and over and over and over. So there's a big difference between, if you want to just build a basket of crypto assets and be invested, well, odds are your index is probably going to look like this. What we would ideally like to do is build that basket of half-decent ideas, and there are going to be runners at any given point in time. It's kind of like the stock market. I mean, I'm not really that active in crypto right now because I still think, especially with altcoins, we're trying to turn this corner. When we do ultimately turn this corner, I'll probably get back more active in alts, but I'm just waiting. There's no hurry for a guy like me. Remember, I already have a shitload of these damn things. The last thing I need to do is add more. But, the long and short of it here is I've already got a whole shitload of cryptocurrency. I'm not in a big hurry to go and buy more. But what I will say is if and when the market starts actually showing signs of strength and, bottoms start coming in, I'm more than happy to start planting seeds again. As we showed you, look at Kevin's idea. This trade's actually looking pretty damn good. There's no reason why you can't, start accumulating, taking, little nibbles. If you want to trade this, obviously it's going to be a much different risk model. And this is just a crop that I'm planting. And ideally, of course, we've done our fundamental research and we believe that these are ideas. And, what ends up happening here is, maybe, I don't know, especially with alts, right? I mean, maybe 70, 80% of them go off the board. Get used to it. This is venture capital. That could very easily happen. But then you get one or two that turn into the Amazons following the .com blow up. Bottomed at like $5, $7 a share. Now you see what the price is. Maybe you buy a Microsoft. Microsoft at one point was only a buck a share, $1.25. I remember that. Maybe you buy Apple Computer. Geez, you could have bought that at a buck or two back in the 70s. And if you just hold on to a little bit of those, just one or two of those can make the world of difference for your portfolio performance going forward. But with the complete understanding that if and when the market does afford you the opportunity, i.e. sell halves on doubles, you take advantage of that and you act. All right. Well, it was an interesting conversation, and I'll probably have more conversations with this gentleman as we go down. But I thought it was, it was a good point that I think was needing to be made. Okay, went about 20 minutes overboard today, but I hope you guys enjoyed the presentation. I do actually have to go potty, so I think I'm going to wind the video up at that, guys. So have yourselves a great day. Fun chatting with you guys. Hopefully I've given you some stuff to think about. All the best, and the only thing left for good old Brian to say at this point is a big bye for now.